inflation, and they've been talking about inflation, and we're having inflation. The inflation is real, of course. It's very high inflation, probably going to be over 10% for this year by the time we get to the end of the year, and you know, that's significant. Everybody's experiencing it at the grocery store, particularly at the gas pump. But if you think about what the definition of inflation is the rising cost of goods and services, right? Rising cost of goods and services. That's why the stock market or companies are great hedges against inflation, because if you think about it logically, if you own the companies who are increasing their prices of their products and services, their value is going to go up with the inflation. So it's logical, but let's talk to them about, show them how historically that's borne out. This is a chart.
Well, this is a website that you can go to actually. If you ever want to run this, it's super interesting. But it shows you can plug in the years and it'll give you the stock market returns of the S&P 500 during that time. And then it'll show what they are adjusted for the inflation at that time. And so
I want to point out too, this calculator calculates with reinvested dividends. So you don't just look at what for instance, the index does. You have to count the reinvested dividends, because dividends are money that you're making too. Go ahead.
So we did this hypothetically between the years of 1974 and 1983. That's the highest years of consecutive inflation that
highest 10-year
we've seen in history. At this point, there was inflation rates that were up to
there were four years in that 10-year time period that were in double-digit inflation.
Right, and up to 13%, I think is what we saw. Some of them were 11%. That's huge. So that's up 13% from the previous year that was 11%, one of those years. Right. It's crazy.
But the total return on the S&P 500 in that 10-year period was 10.75% or 10.73% per year. But when you adjust it for inflation, because people were losing buying power, it was still at 3.21%. So you maintained and increased your buying power a little bit if you stayed invested in large United States growth and value companies, which is what the S&P 500 index, the 500 largest companies on the New York Stock Exchange is during that time. So we believe that it's the best hedge against inflation is to be invested in the companies who are producing and selling the goods and services who are going up in price.
Another thing